Elizabeth Anscombe coined the term consequentialism by saying, "The act is right for an agent to do which, among all the actions available to the agent, leads to the greatest balance of good over bad." Sometimes acting ethically, it doesn't end up, putting you in the best light, but it takes a lot of honesty and the most honesty and transparency takes a lot of courage, because it shows that no matter what the outcome is, you're willing to be honest about the business and all of that, just in order to stay in line with your ethical values and beliefs. The responsibility of the financial statements lies on the financial accountant, and therefore lies on the financial accountant's ethical standards. The financial accountant has to be the expert on everything really that's going on in the company, and being able to represent what is happening in the company in the financial statement, so that people, the users, like investors, they can say, okay, well, this is how everything's going, so we're going to invest in you X amount of dollars because of your revenue and all of that. Whereas if the financial statements are inaccurate and showing that they're making a lot more money than they are, and investors invest a lot more money, the chances of them losing that money are a lot higher. And so there's, in order to get those higher investments, and in order to get higher rewards themselves, because the better the company does, generally financial accountants are compensated for that. There's, a reason for them to act unethically in order to inflate those numbers and show that things are going better than they actually are. But ultimately it boils down to, really, the success of the company is dependent upon the way they handle everything ethically. There are a few examples of ethical failures in financial accounting that I want to talk about. The Enron scandal. Enron took advantage of the fair value accounting rules, so much so that their financial statements didn't accurately represent their financial standing, and ultimately led to their demise. The Lehman Brothers, on the other hand, their business model was so complex and had so many intricate details that they were able to hide little things that were unethical and inaccurate in all of those details. And, eventually it all came crashing down, but for a while that was working for them financially as the papers, but their financial statements weren't actually showing how they were doing as a company. Most recently, the Valent Pharmaceuticals, they have been recording inventory transfers from subsidiaries and parents and parents to subsidiaries, and recognizing those as sales revenue, which inflates their top and bottom line and is making them look like they're doing a whole lot better than they actually are, just by transferring their inventory. Basically, users depend on the financial statements and the accuracy of the financial statements very heavily. It really makes a big difference when the financial accountants in the industry and in the company are being ethical in all of their decisions, not just picking and choosing what they do. There would be, if we could get everyone on the same page so that users could trust in the financial statements entirely, there would be more investments, which would lead to more liquidity in the market, which would lead to more activity, and the economy would just continue to rise as a whole. But because of all the scandals like Enron, Lehman Brothers, and Valent, there's a skepticism towards financial accounting and really trusting in what financial statements say. So it really makes a big difference, and acting ethically is really important in the long run.